How's it going, everyone? It is Tuesday, April 2nd, 2024, and this is the video for today. So the pick from yesterday was Lulu. So we looked at our Lulu PDS over here. I talked about the 385, 375 PDS, so we got pretty close to that. My risk appetite is a little bit less for the debit, so I ended up going for the 385, 380, but I was able to take a nice win on that this morning and take a good 30% profit. Some people even took closer to 40, 45%. So it was a very nice opportunity, especially for a Tuesday on a PDS where you usually want to target to 20 to 25%. So that's what I said in the trade. And if you had taken that, let's see how that PDS would have fared right now. So we're going to look at this, look at the 385 and then 375. So right now it's at a $6 debit. So if you got in, or bid-ask spread's pretty wide, but let's say you get in around the mid, so 580. So if you got in at $3 and you got out at 580, that is a pretty nice win, almost 100% on that spread. Very, very nice move. So was a nice win for Lulu. Okay. The other trade that I ended up closing today was MPC. So MPC, if you remember, it was an open trade that we took it off this 8 EMA bounce on the 28th, continued upward today, and we added it a little bit yesterday because we liked the relative strength during the market. And today I ended up taking profits right around here in the open. I don't have any passive targets sitting out over here, but the market is pulling back. I like the strength of this stock, but we have some great gains on the ad, and I'm not sure how much this market pullback or how long this market pullback is going to last. So I don't want to be adding to any of our open positions right now. We want to keep our moves pretty light, pretty short term, while we see and gauge the movement of this pullback, and then we can get in on our long side once the market finds some support. So MPC from the last video was a nice one as well, and we're going to remove both from our YouTube picks. All right, so we still have App, Wells Fargo, Amazon, and Lyft. Our Amazon put credit spread is in pretty good shape. We still have another week and a half on that. Nice buy signal over here as well. Plenty of space to this resistance level over here. Wells Fargo is also in decent shape. It's holding up pretty well. Given that the market's going down, it's gaining some relative strength. We know that this stock will rally into earnings. Same thing with App. Took some heat earlier, but you can see go a gap down, recovered all the gap while the market is moving down, and it's holding all the gains at this level. So App's a little bit choppy. We're going to give it some time and let it, we want to see it move up once the market finds some support. Our only problem child over here is Lyft. Lyft is getting a decent pullback over here. I didn't like how it is dropping below this level. I'm going to put some alerts at the high and the low of the day. I like to bracket some of my picks, just see how they do. And so that way I don't have to over monitor them. I just see when they're making some move of significance. So I don't like this pullback on Lyft. I already didn't like this Lyft even over here. While the market was weak, it was moving lower. So I need to see a strong move like this from Lyft. And you notice the pattern of the stock, right? It makes a big move. It'll have a deep retracement, find some support, and then it'll start to launch off. So because this is a choppy stock, I had to kind of give it more time. And I think it was not a bad, I think it was a good play in hindsight. I wanted to see something like this, right, where we got this breakout. Yeah, we get a pullback and then we get a strong move up and we break out. But because this is going a little bit longer than we thought, we don't quite have the market tailwind in our favor. There's some resistance coming up over here. I'm not crazy about Lyft. So here again, we're looking to escape with a much smaller loss if possible on a double top lower high. And I'm confident in this trade because we know that this is still in a bullish trend, right? We're still making higher lows and higher highs. That was not how I wanted to draw this trend line, so I'm going to delete that. Right, still have this trend over here. There's still this top trend over here. That's also pretty bad, but you get the idea. We're in an upward channel. And it's a choppy stock. So we have to be a little bit more patient and we have to withstand a little bit of a deeper pullback. The good thing is we have plenty of time on our calls, so we're not worried about that expiring. Okay. Now let's talk about the market D1. So our long-term bias is still bullish and less so bullish again, right? We've seen a lot more red candles over here. And I think this move here sort of confirms this short-term resistance at 525, 524, around this level, because we had this breakout over here. And unlike previous breakouts where we're still buying, right over here, breakouts, buy the dip, and then we still buy, asset managers are getting a little bit more passive because the market has made a big run and they're taking gains on these new highs. That's why we're seeing all these red candles, because the market has made a massive run up. So they're going to wait for the dips and then they're going to be inclined to buy these dips, and that's we want to ride this express up. So we had this big move here. We had this gap. It did hold the gap, which was nice, but then we started to trickle back in here. Asset managers tried again, made a very temporary level of resistance, and now we have fallen back down. So I think if you're unsure about what's happening, this might be a time where you panic because you're like, oh my God, right? Market's at 517. That's so low. We gave up all these things, double top forming. But what you also have to realize is that after these big drops, that's actually when we're the closest in time for this next leg higher. We just have to wait for the price action to let us know that we are ready to go. So that is our longer term bias. We're still pretty bullish. We're just in the pullback phase of this rally, and we're noticing that the long term technical context is shifting to a more stair-step pattern where we're going to want to time our short-term swings on pullbacks. So it means that I don't want to add to swings while the market's still going down. I need to wait for support to happen. I want everything to line up in my favor for these highest probability trades. In the meantime, we have day trading on our side. We have overnight swings, credit spreads, debit spreads, and we're looking for credit spreads that we can rely on once the market finds support. So we need a lot of strategies in order to be successful. Our short-term bias is a little bit more bearish. So if you remember the last video, I was more neutral here because we were kind of, not really going anywhere. We had this test up higher. I liked that we held, so I thought that was all right. This is a nice little bullish win. Big gap down at major support. So I'm all right. We are in this is a mildly bearish move in the short term, and we're not going to take any swings until we can get a close above the prior day high. Unlikely that that's going to happen today, so we're not taking any swings. Our support is at this major level. Like I said, here's our resistance for the day. I think swing traders should hold off depending on what the market does. There might be some opportunities for some short-term overnight swings. There also may be some opportunities to day trade depending on what the market does. So far, looks like there's going to be some pretty slim pickings for day trading. And let's look at the market on an intraday basis. Let's look at what the price action is telling us for today. Our long-term bias, again, is a 2 bullish. Our short-term bias is a -2 bullish. And our market M5 bias, we're going to talk about right here. Big gap down. Okay, so we don't really want to chase these big gaps down because it's an unfavorable risk-reward profile. We get some movement down here. Tall bounce at this level. 2 long red candles. Okay, so if you look at just this move right here, this is a pretty bullish move. And if there wasn't D1 resistance, I think this was a pretty decent shorting opportunity, all things considered. But because we're at D1 resistance, we have to be careful. This is buying. This is buying. Test, 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 buying, and then we make a new low of the day, and then buyers gobble this candle up pretty quickly. So that is a pretty decent sign of support. We start to rally higher, and then we try to challenge this high, and now sellers are coming in to defend this level, and now we're going to take another crack at this. So my bias for the day is 0, maybe -1. I'm mildly bearish. I think if this bounce got higher and challenged the high of the day, I'd be more of a 0. Because this is still a lower high, I'm a little bit more bearish. But because we're at this D1 resistance level, I'm not really inclined to take any shorts. There's no room, right? We're right at support, and there's so much room to the next resistance. So it's not exactly the place I want to be looking for shorts. So it's a good time to set alerts, be passive, find great stocks that you can enter on put credit spreads, and also stocks that you can enter for some short-term swinging. So if I'm a day trader, I'm going to be pretty sidelined today. Just not a lot that I am liking in the market. And I don't need to trade. I don't need to waste my capital trading some of this garbage when I can wait for these higher probability moments to line up. So earlier I thought we had a chance for a trend day. I think we still could, but we'd really have to see, buyers continue to fail and sellers continue to defend this level, and the longer we hold a low of the day, the higher chance that there's going to be a range bound day. So a couple of scenarios I see. If I wanted to be more bearish, we'd have to see some stacked red candles through the low of the day. That's the max bearish scenario. If I see that on heavy volume, we really blow through that, then I will be a lot more bearish. Now, if we get some steady selling, we break through on decent volume, I'm still bearish, but I'm not as bearish because the aggressiveness of the move is not as aggressive in terms of the speed and velocity of the price action. My -1 is my current bias. For me to be a 0, I would have to see probably a bigger bounce to the top of this range and then a rejection, so that would confirm that. And the price action on the way up would have to look something like this, where we trickle up, there's red candles, low volume, and we're just sort of weakly drifting here. Sellers are very, very present. When we get some support when sellers get some reinforcements at the resistance level, then the tides will start to turn. So for me to be a 2, we break through the high of the day on some nice steady green candles. So instead of something like this, it might look something like this for a little bit longer. We have good volume, and we have some pretty orderly price action. For me to be a 3 bullish, we got to see some long green candles, right? I want something like this or something like this, where we have a range bound day, and this is a great example. So on the bearish side, if we had a range bound day, right, and you copy and paste this price action over here, that would be a pretty bearish move. Range bound day over here, and we get this price action on the way up, rising R volume, stack green candles. This is a pretty bullish move, so that would get me a lot more bullish in the short term. Let's go over some picks that we can look at for today. So because of my bias, there's not a ton of picks that I am liking. Let's look at this Lulu alert over here. Let's see if something is setting up. So this is a nice move from Lulu. I think it's going to have another leg lower, so we're going to check on that in a minute. Let's look at some picks that I like. So first one that I thought was great is RTX. Long compression, broke out, nice steady grind higher. This is a very nice slope up in the 8 EMA, good 45-degree angle. I don't think it's getting too overextended. It'll pop up, it'll compress, and then it'll make its next leg higher. So I liked it, but I don't have to enter right now because the market is still pulling back. So what am I going to do? I looked at the M15 level, and these M15L RSI alerts are really excellent entry points. We get this dip, get this move up higher, get this dip, get this move up higher. So I want to enter in these alerts. So I set an M15L RSI alert on RTX. So when it goes off, I'll see if the market still looks good. And if it looks good, then I'm going to enter the stock. If it doesn't look good, then I'll set another alert and I will move on. So RTX is my favorite pick on the long side. Skechers is a nice pick. You can see a very clean breakout over here, finding a little bit of support at that level. And let's take a look at this price action. This is a nice move here. Choppy stock, long bullish hammer, tested this level again, and now it's starting to trickle back down. Volume was pretty low at this level, and now the volume is starting to pick back up. I'd want to see it personally get through its low of the day before I get into any shorts. Because it's a choppy stock, all that tells me is that there might be some short-term support over here, maybe from this old gap, and I'd want to see that broken, retested, and then get a flat top HA candle, a bearish HA candle, to confirm that the buyers are now sellers on my side. Humana, very, very nice short. Compressing here at the low of the day, pretty weak, digesting a lot of this move. I think the chance to get it on Humana it could be good for today. It's already made a massive move. If you look at the D1 chart, very low extended from its 8 EMA. And this is a choppy and doozy stock that, I don't know what's going on, Humana. There's probably some news. Lower than expected Medicare rates. Okay, so looks like Medicare is kind of messing up these health insurance providers, which is why CVS, also on my radar today, breaking through some of his SMAs on some of this major news. So a little bit more of a newsy stock. A less newsy stock would probably be Lulu again. I mean, just look at this price action. We got some breakthrough. I still think that you want to enter on these LRSI alerts, and you can get a pretty nice move targeting the low of the day on this. Maybe a quick scalp, like $1 or something. But yeah, I mean, I don't have a lot of amazing picks. I just have alerts set because I don't know what the market's going to do at this level. So my pick for today, I'm going to give you RTX on an alert. So this is not really a pick, but this is sort of like a future pick. It's kind of like, I don't know, like NBA stuff, where you get like future, you get like 2026 picks or something like that. So RTX on LRSI M15 alert. So the first thing we need to have for this is the market has to make a close above the prior day high. RTX has to be relatively strong. And when we get the LRSI alert on RTX, that alert is on a higher low than the prior low. So that's going to be my pick of the day. Hope you guys found this pretty helpful. And we will look at these picks tomorrow in the next video.